And we're
Alright, baby.
live. All right. So we were just talking about this trade. We were talking about the signal bar. We have, come on, mouse. We have a big push down.
Don't mind my dog, audience.
You're fine, man. I'm just trying to get this mouse to work. I turned this on and all of a sudden my mouse doesn't work.
Here, buddy.
Yeah, so we mentioned this being a good signal bar and a second entry. This is also kind of a range, like how I was just telling you about, but it's a range, really no follow through. So, and bears who took this entry probably disappointed. But we have this bear bar, and we have no follow through from that bear bar. And then after that, we have this bull bar, a bear bar that punctured just below, another bull bar that closed at its high, and this creates a really good signal bar right in here. And of course, you got a nice winner from it. Boom.
And then the quick review of the other one, to have a stop in the middle of the range is not ideal.
Yeah, so trend bars, you had a tight range. Would have preferred a second entry here, even if it would have failed. That's fine, because if we take an entry in here, then we are buying at the high, and our stop loss is down here, which is inside of this tight range that just formed. So quick review there. Okay, any questions with this chart? Really great winner here, by the way.
No questions. Good to go. We're on to 26.
26.
You see an email?
Probably is. Which one is it? Because I know I have my email pulled up. Twenty-six. Let's see here. 26 5-minute. I'll go ahead and download that. And 26 chart.
So would you still prefer me sending you like the wide view of the tick ones, or just the 5-minute and the main chart?
I don't know. I mean, it all works. Like sometimes we use it and sometimes not really. If you wanted to just simplify it and do the main chart in the 5-minute, you could. If not, then you don't have to. You send me more charts than anyone else does, that's for sure. More views, more angles.
Yeah, because I want to know. I want to know exactly what's going on.
Fair enough. I don't blame you. It definitely helps because you can go back and interpret things better. Okay, so this is a long entry, right? Big spike up. 1, 2. What day is this? 26? I'll have to look
Monday.
on. It was Monday. Oh.
Yeah.
I believe you went long when I went short. I believe this was a live trading day. I'm pretty sure. Yeah. In fact, I shorted here this day.
Brilliant. And it tanked 20 points right after that.
It did. I don't think I got quite as much as I wanted out of it, but it's true. So what this was, Ninja Trader is not working for me right now, so let's just try to go through. Hopefully I'm not wasting time doing this, but let's try to go to 26 on the 5-minute on SPX. Twenty-seven, 26. Okay. So let's see where we were. So this is where I went short, I believe. Is that right? No. It was... Okay, I see. It was over here more. There's noon. Oh, I'm on the 1 minute too. 2:26 at 3.
Who's at the open?
It was at the open, yeah. So, I don't think, because this doesn't show overnight data, but I remember seeing a range down here and a push up out of that range, and then we had, what was this Monday? I think it was Monday. We had a push up out of the range. We had 3 legs up, and then we had a wedge top, which is what I sold. I don't know if it was 2.6. There's a video of it on my YouTube. You can go watch it yourself, but I do recognize this chart.
Sure.
I did take it short. But the reason I took it short was because we had 3 big pushes up. And then when I looked at it, this leg on the 5 minute primarily had more bear sellers. This pullback had more bears in it than the previous leg. And this leg on the 5 minute not only had less bulls, but it was the 3rd leg up. It was a double top. And I was looking to take it short. That day too, we had, let's see, it was right after a big bull day, and then that day ended up being kind of small, I do believe. In fact, all of last week was really, really small, and trading ranges were really, really tight. But we had, because I was anticipating a trading range day that day, when we pushed up in the overnight, we pushed up near the all-time highs as well. And so I had a wedge up, 3 pushes up. I had evidence of more bears selling here in this pullback, weak bulls in this 3rd leg up. And then I had a slight trading range, which made me kind of inconfident that the bulls would be able to continue. And this trade right here is actually, I did take it on the 2000 tick. It's 1 pullback 2, but it's also a 1, you could say pullback because it doesn't really break the channel, 2 trap for the bulls. So it's both a 2nd entry short for the bears that I took and a 2nd entry trap for the bulls. So those were my reasonings for entering short in that trade.
Nice.
But I think it's interesting though. We took a position on, I mean, you were a bar after me. I took a position on this bar here. But that's just kind of what I saw. You can watch the YouTube video. I explain it a little bit more better there.
I will. And just the profit target was not good anyway. I even wrote there like I should have just skipped it. I guess I don't know. I was just itching for a trade, I guess.
I get it, man. I get it. Trust me. Yeah, profit target. Yeah. Okay, I think you understand that. Any questions?
No questions. Good to go.
Okay. 28 then.
Yes. Unless you want to give your audience a 27 2-second review. It's up to you.
Oh, yeah. Sure, we'll do that.
Bad profit target again.
Bad profit target. It's 1, pullback 2. Profit target be somewhere in here. And then, kind of like what I mentioned before, so we have a 2nd entry here. Probably would have been a little bit better. Sometimes if you get 2 2nd entries, you know, like back to back, sometimes it's a little bit suspicious. Because if you think about it, right, a 2nd entry is essentially a point in time where the bulls have to buy twice to have momentum. It's not a high one or a 1st entry. First entries are always strong. If you see first entry after first entry after first entry, you know the trend is really strong. But sometimes if you see 2 second entries back to back, sometimes you have to be a little bit suspicious of them. And you have to wonder if we're a little bit later in the trend than what we think we are. But if we also go to the 5 minute on this, we can see a lot more. Let's see, it was
Right there,
227.
27.5. Yeah, the 5. It says right there,
There it
27.5.
is.
Yeah. Yeah.
So we were over here. Actually, we'll look at this wide view. So we're going long there, but this is the 5 minute view. And we have a channel line
Going down perfectly.
going down right along here, even though it's not straight, we get the idea.
Yes.
And we have a range. It doesn't really matter how you draw the top. I'm not even going to bother drawing the top, but the bottom is really important. And the
Yes.
bottom is right around here. So we're taking a position that's at 2 different points of resistance, this channel line and a retest of this range, which it was rejected from. So just be sure to zoom out on the charts, maybe look at the 5 minute a little bit more, and we should be able to see that.
Awesome. Yeah, the only one question here is what do you mean by the back-to-back second entries?
Whenever you have a second entry, let's go to this other chart real fast. Whenever you have a second entry and you have a second entry, it doesn't go super far, and then you have another one right off the bat, that other second entry can sometimes be a little bit suspicious.
It's the tick one. 27 tick. 27 tick. There you go.
So
Yeah, 1, 2, right there.
there's one, right? First entry, pull back, second entry. And it kind of went far. It didn't really go, too awfully far. And then we had an immediate pullback. We had a first entry, pullback, and a second entry that triggered here. So think about this in terms of the bulls real quick. And don't even worry about where the resistance is or anything. And let's just think about a strong market. What does a really strong market look like? Let's just say it's a strong bull market. We're going to have big bull bars. We're not going to have many pullbacks. And whenever we do have a pullback, it's going to probably be a first entry winner. So market's really strong, and we know it because we look at things and, okay, first entry winner, first entry winner. After a while, it begins to weaken a little bit, and it becomes second entry winner, second entry winners. Not always, but sometimes, generally speaking, I should say, you're going to have a second entry after, if the market is strong, after several first entries, successful first entries. And we don't really have that here. But if you have a successful second entry, or if you have a second entry at all, it's probably a little bit later in a trend. That's also why we use a 2000 tick, is because there's more second entries available. But if you have one that doesn't go very far, like this one, and then immediately pulls back into another one, then we have to be kind of suspicious, because the bulls don't have enough power anymore to just push the market up the first time. This time it took 2 pushes to push the market up, and it didn't go very far. And then it's going to try to push twice again. It's a sign that the bulls are getting weak. If this was stronger, then this should have been your second entry, and we should have pretty easily gotten up here. It's not like it had a long ways to go. Does that kind of make sense about 2, like, back to back?
Perfect sense. Thank you.
And it's mostly for like trending markets. Obviously, if you're in a range or something like that, you're going to have second entries back to back all the time. That's really, it just applies for strong market trends.
Roger that.
Okay.
Thank you.
What are we on? Are we on 28?
Yeah.
Okay, broad bear channel. One, two. So you took an entry here. Why did you take?
Yeah.
Why did you take an entry there? What was your logic behind it?
I'm looking like channel. Okay, I'm thinking that even though I have the bear channel, I'm thinking with the range that the bears got weak, and I was honestly thinking like doing the opposite of. This is one of those days like I think I'm gonna do the opposite of what I would think, because like I'm seeing like, yeah, the channel line bounces to go to the downside, but I'm also seeing the range making me think that it's weak, and when I drew out, yeah, I guess I saw my stop being outside of the range and outside of this channel line if the bull one was good. So that's why it's good.
Gotcha. So whenever we just because there is a range does not necessarily mean that we're incredibly weak. And if we look to our left, this has a lot of bear bars in it. And it's a lot of bear bars that have pretty good closes. Good close. These aren't great closes, but it was followed by a really good close. Good close here. Good close here, 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 here. You know, we had quite a few really good closes in it. So remember, context means a lot to us. So whenever we look at this range and we look to our left and we see this big, strong leg down here, then we need to wait for evidence for the bull for us to be bullish again. I would have preferred a short entry somewhere in here, and even that, you know, may not have been the best entry because of this range that just got continued. And let's go ahead and adjust these lines too for the range. Let's put them here. And then the bottom one, I don't really have a problem with the bottom one. There. So that's the range.
That was a straight line.
I know, right? Shocking. I'm getting better at it. So I would have preferred to take a short entry, really,
Okay.
than anything. Let's look at the 5 real quick on 28. Let me download it real fast. Okay, so there's your entry. We do have a broad channel here. You can probably start it from there, but I think our angle would probably change maybe just slightly too from here. I don't think I can draw this straight, but
I was also thinking that like if the market was kind of open slight range and then tanked, I was thinking like the reversal. That's kind of why I went long.
I gotcha. We do have this major trend line here that we are going up against. Had this small range, 1, 2 here, and then 1, 2. It was a second entry for the bulls on a 5 too. But it's just, if the market's going down here, and here it had a sharp sell-off, you know, getting in here would have been a lot better. if you're going long in here, you really need to be either sitting out of the market or you need to be looking to be short, because that's where the trend is going. It's going down.
But buying right there that'd be timing the bottom, right? That'd be kind of like lucky a little bit. Like if anything, I'd get the long, like once it pulled up a little bit and then pull back around the EMA.
I mean, reversals are difficult to catch and they're less likely. So there is an aspect of luck to any reversal. But with that being said, though, there's also price action evidence. So we have the absolute low here, so we broke it. And if we have, get this program to work here. So we had this big leg down and we made this low. And then we had a push up. We had a small range, market kind of floated, and it pushed right back down to test this major portion here. What happened after we broke this low? Let me scoot back here. After we broke this low, we broke it with this big bear bar right here. Huge bear bar. And with something so strong, you would think that, oh, we're going to go down even further, right? Big bear bar. But what was the response from that? Little bear bar. And then we had a bull bar. Still not quite good enough of a signal to buy. We have this tight range. We can look for a second entry here, which actually isn't a bad spot. We have a push up, one, pull down, push up. And this would be your second entry here, right before a nice move up. But what we're doing is we're looking at this and we see, okay, bears have hit their profit target. Not only have bears hit their profit target, but now it's a good place for bulls to buy because they're buying at a discount. If they bought in here, 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 they can do that, but they're not buying at a discount. Here they're buying at a discount, still in a relatively bullish market. We have this very, very sharp sell-off, specifically from here to here. And if we look to our left, we see another kind of sharp sell-off here to here, but it's not anywhere near as sharp as this. Sometimes when the market is just kind of floaty like this, and all of a sudden it just sells way off like this, it hits, it becomes climactic. And your buddy that you were telling me about, I'll bet would be really interested in taking a position somewhere under this red line. Why? It's a break of structure. You're in a liquidity area, meaning that this is where bears begin to get out, bulls begin to buy, so the market is flipping. And I don't know what his stop loss would be, but it'd probably be pretty tight. I don't have volume profile or Fibonacci up, but he might like those aspects of it too. This is actually probably a place where your buddy would buy. But bears are getting out, bulls are getting in, we have a second entry, and we're betting on a reversal. Anytime we have a reversal, we have a low probability, relatively speaking. We have a tight stop loss, and we have a large profit target. Profit target is going to be this channel line up here. Or really, anywhere. You could sell here, you could sell anywhere. But that's kind of the logic behind it. And it's all about really looking at this follow through. Big bear bar, no follow through. First entry, pull back. Second entry, small stop loss, really big profit target.
Cool. So would you enter on the 5 minute, or seeing the second entry on the 5, then go to the tick and get the second entry?
So in something like this, I might just go ahead and enter on a 5. I can't really gauge risk here, but it doesn't look like there's a whole lot of extra risk in this, or I will just see this bar here and I'll switch to a 2000 tick real quick and I'll take an entry there. My risk probably won't change, probably have the same amount of risk, but it kind of depends on like the risk factor. The reason the 2000 tick is up, the big reason is because it mitigates our risk and it gives us another logical opportunity to enter.
Roger that. Thank you.
Mm-hmm. let's see. Okay, 29.
Please.
Okay, so we have a sharp sell-off. This is only 2 bars on the 5-minute. We have this big previous to this too. I'm gonna do this real fast.
Okay, yeah. So my thinking here is the open. It was ranging at the open. I saw it when I pulled up the chart. I saw that it shot up, and I'm like, okay, great. We're at the high, so I'm kind of hands off. I didn't think I was gonna trade at all, actually. And then I saw the pullback, and then when I saw the pullback, I was thinking, oh, maybe long entry, around the 5-minute EMA. So that's what I did.
Gotcha. It's a little bit difficult. Sometimes the market does this. It's tough. What we need to look at here is we need to look at this double top right here on this 5-minute. Anyone who's in long here, anyone who bought this, is going to be disappointed by this double top right here. So it's kind of also what I'm talking about when I say to switch to the 5-minute and read it more. I feel like giving you a broader perspective will probably help more. We have a double top, and then we had a strong push below the EMA, and it gets bought up, and it's being tested right now. Is this going to stay above the EMA, or is it going to go below?
You're saying, like, what was the aftermath, or you're asking me, like...
What do you think? I mean, honestly, the aftermath doesn't really make a difference. What is the probability just looking at this? We don't even need to know what happens next.
The probability of it testing the EMA and shooting down?
The probability of the market continuing higher.
I couldn't tell you.
It's probably really close to 50-50. It's probably maybe a little bit more bullish, but here's the deal. We have this huge bar, ginormous bull bar, and there's so much buying in here, so much buying. And then this is also the open, isn't it? A little bit before the open, actually. And so we have this huge volume that comes in, and we have a nice push up. And if we look, we think about a trending market, right? We have a trend, then we have a doji bar, that's a pullback. We have another doji bar, that's another pullback, so bulls may look to enter above. Bear bar that didn't go anywhere. 2 bull bars that went up a little bit higher. And then we have 3 bear bars. So out of this little group of bars, we have 1, 2, 3, 4, 5 bear bars and 1, 2, 3 bull bars. So, and we're really far away from the 20 EMA. So we're already in here seeing bulls hesitate just a little bit to buy. Bought a little bit more here. Good signal bar, probably continuing higher. Bulls are buying closes here. Bulls are buying closes here. If you're a bull and you bought this close, and you see that this bull bar here is followed by 1, 2, 3, 15 minutes of bear activity, and then you see this, maybe you want to buy more. Say, okay, you buy more down here. You're about 50% from the top, or I guess this is the close from the top to the bottom, so somewhere in here. So bulls actually got out break even right in here before the market pushed down. And if you were a bull, you should probably be getting out here. If you look to enter here, that's fine, but these are just short plays. We're really far away from the moving average. Now, we thought that the moving average was support. And most of the time, if the market is in a truly strong trend, it'll gap the moving average. And then as it begins to get later on in the trend, it will get to the moving average. And then after a while, after it gets to the moving average, it'll break the moving average. after the first time it breaks the moving average after 20 bars or more of not touching it, then it's likely going to be bought back up. This right here was not bought back up. There should be buyers here, but there's not. Now we're retesting it here, but the market is in 50-50 right now. We don't know if this is going to continue up. We don't know if this is going to continue down. The best thing to do really is to wait. There were a few opportunities to enter for very small profits in here. Couple points here and there. Big break below the moving average. We're testing it. Let it test it. Let it figure itself out, because right now the market is too 50-50.
Roger that.
Does that kind of make sense what I'm saying about the moving average?
Yes.
Yeah.
It either... Okay, so like, where you're, just to clarify, so around 8:30, we're at the moving average, price shot up, and you're saying that around 20 bars of it being away from the moving average, that little gap between price and the moving average, it's going to be getting closer as time goes on, unless in this scenario where it just shot right through, then it was a 50% pullback from that push up, so we have to see how it's going to react when it comes back to touch the EMA again.
You're absolutely right. I mean, there's reason for bulls to buy. There's reason for bears to sell. So let them figure it out first and then look to enter. If we get, maybe we get a weak push down. I don't really know what happened after this, but like I said, it doesn't really matter. Maybe we get a weak push down here and we get a higher low. That could be an opportunity to buy again. Maybe we have a small range here, but maybe we get a really big bear signal bar that closes near its low here. Well, then we're probably going to go short for at least another leg down.
If I'm not mistaken, I'm pretty sure it tanked after this.
It's good to watch out for it, man. It's good to watch out. These climactic moves, they're really killer. If you saw, I know you're not really a Discord person, but I know that you're in the Discord too. One of the things I mentioned last weekend about market and anticipating the market this week was to not believe, because we were expecting a tight range this last week, don't believe the market when it gives you a big, strong trend. Be suspicious of it. And this is one of the reasons why. Because we're in an overall range, we have big climactic moves like this where it's like, oh my God, the market's, the S&P is going to 7,000 today. And it's like, no, that's not what happened.
Roger that.
That'd be ridiculous if the S&P went to 7,000 in a day. That'd be insane.
Yeah, thank you for the clarification.
Absolutely. Let's see.
That was a skippable trade then.
That was what?
Another skippable trade. These two. Right there on the screen right now. Skip.
Yeah, skip. Just wait for the market to play itself out. Like I said, I think moving to the 5 minutes is going to help you with this. I really do.
Okay, I'll pay more attention. And 30.
30.
There is no 30 in February.
Yeah. I think you meant 1, right?
Yeah.
Yeah.
Yes.
Okay, let me pull up the 5 here.
And I just realized the 29, that only happens once every 4 years, right?
Yeah, it does. It completely messed up my calendar. I didn't even think that it was leap year or anything like that, and then all of a sudden it's like, boom, February 29th. I'm like, oh, okay. Okay, then. Okay. Just kind of walk me through what was going through your mind here.
Okay. What was going through my mind, right? Okay, my account right now is actually I'm like halfway before getting resetted again, so that's why I only did one trade. I'm keeping it super clean, just like like I said, the audience doesn't really know, but we're evolving from mayhem. So here I knew I was going to take just one trade, win or lose. My thinking is I have I'm looking at the open, I'm seeing like up and down. So I have range lines drawn there, and I'm seeing a bull channel. So I was going for the fade with the profit target of a couple ticks below the high.
Mm-hmm.
And I thought it was actually highly probable. I felt pretty good about it, and I was in it for a little bit, and then it ranged, and then I knew it wasn't going to work. But I still held it to the end, you know.
Good, good. Yeah, I mean, just looking at it on the 2000 tick, it does look like a pretty good trade. You have one couple bull bars there. You have a pullback. Signal bar could be a little bit better, but your fill bar is really nice. You have a pretty good fill bar. And then it just kind of found resistance at the 20 EMA, unfortunately. Fortunately, that happens sometimes.
Yes.
I'm looking at the... Go ahead, I'm sorry.
I was just gonna... No, you first.
I was about to show you a chart, so go ahead and...
Okay. I was gonna say, with the resistance of the EMA, and you see how it's like bending down, when that was happening in live time, I'm also like seeing a bear channel from the top, from that high,
Sure.
around 7 a.m. I'm seeing that like kind of perfectly go down.
There, or you could even draw a bigger one.
Yeah, that one.
Something like that, yeah. Absolutely. I'm looking at the 5-minute here. This looks like the 5... It says 3-1, but it looks like yesterday's 5-minute. Oh, no, wait. You were showing that, and then you were showing this in here, right? Got that's the entry we're looking at, right?
Sorry, I got a little confused. What happened?
This was yesterday, and this was today, right? The
Correct.
3-1.
Friday.
Friday,
This
yeah.
one on the right is Friday. The one on the left is Thursday.
Gotcha. Okay, so let's see. Still in this broad channel here. And then here, we kind of had... Look at it's a little bit difficult to see right here. And like I said, my Ninja isn't working today, but we have this big bull bar, and then it's followed by this big bear bar. And this big bear bar undoes most of what this bull bar did. In fact, it looks like it undoes the bull bar plus a little bit more. And it's followed by several more bear bars. So there's a lot more selling in here. How many legs up do we have? We can say maybe 1, 2, 3 legs up. So maybe we're at the top here. It's a little bit risky with these big bear bars taking an entry in here. Maybe we should look for a better signal bar.
Okay.
It's not a horrible entry, don't get me wrong. Like, I may very well have taken it.
Have you noticed a certain amount or average of legs before a change or before a range?
Yeah, so the market, kind of going back to second entries, the market generally is going to have 2 to 3 legs, but it can have more. So you have major legs, and legs can be thought of as channels. Go back to this. It can be thought of as channels, or it can be thought of as high 1, high 2, like how we think of it, now.
Yeah.
But like this is an example. You can draw a channel from this higher low to here. It's only like 2 bear bars, but you can draw a channel there. That's a leg. Then we have this push back. We have this double top, and we have another big push down here. That's a second leg. So it's like 1, 2.
Yep.
And we can tell too, if this leg here is about the same size as this leg here, and then we have this big bear bar, and we have this big bull reversal bar here, that can mean that it's the end of that move right there. So it's similar to a measured move. you anticipate that one leg will be the same size or about the same size as the other. If you're looking for a failure, a measured move does tend to fail around 2/3 if that's what you're looking for. It's a lot more common in ranges. So that's kind of what I mean by legs here. And we can count legs differently here too. We can say this is a one leg, two leg, or we can say this is one leg, two leg, three leg. And if we look at these from a really broad perspective, then you'll generally see that the market gets 2 to 3 legs up, generally speaking, or 2 to 3 legs up with a minor fourth leg. If you just really, really look, use your wide-angled vision and really look, it's one major push-up, two major push-up, third major push-up, and then we ranged.
Yep. Got it.
Something similar here.
Okay.
Major, major. So, yeah.
Brilliant. I love it. I love it. Thank you. And looking at the tick chart, yeah, you don't see the legs like this. Like where I took the fade, this is this is like on its way to make another leg, but little did I know that it'd be its fourth leg. So it's kind of pushing it.
Yeah, it kind of is, and if we look at it on the 5, and this is kind of one of the reasons too, I'm getting more and more back into the 5. But if we look at it, this is a small leg here. It's kind of minor when you look at the whole thing, though. You can think of it as one, and then you look at the size of this leg and say, okay, it's close to the size of that leg. It's probably about a 2/3 failure, and then we say, okay, well, that's probably the second leg. And then we look at the size of this leg, and we look at the size of this last leg, and we want it to be close to the same size. And if it is, then it's relatively safe to assume that this is the last leg, at least for the time being.
I love it. I love it. Okay, so definitely pay more attention to the legs on the 5-minute chart for me.
Absolutely. Go ahead and just watch it more too. I think that you'll see what's going on. When you think you see the price at a support or a resistance on the 5, jump to that 2,000 tick and look for a second entry. I think you'll do really good at it.
Thank you. And I also want to summarize what we, review what we did before. It's range, breakout, thin channel, broader channel, then a range again.
Yes, market cycles. Absolutely.
Brilliant.
Right.
Thank you, Nick. And I'm glad to be back. I'm happy to do these charts again. It is really exciting.
I'm glad you're back, Charles. I really am.